Hey everybody, this is John. Welcome to the free video. And I just spent some time on the premium video just talking about today. And today's been, it's one of those days where it's like we got some specific sell signals. It's like, all right, let's close out longs, let's go short. And we've been focusing on Federal Express and some of the transports and some of the restaurant stocks. And so the question now is, how much further does the market go from here? I mean, the S&Ps are down 1.45%, which is conviction. And so as I'm looking at this, I mean, the problem with today for bulls is that we have not had one buy program today. So buy program has to happen above plus 600 ticks. And it's just been sell programs all the way. And even when we do get up here, okay, and this is the yen, by the way, and as long as the yen is trending higher, stocks are going to be under pressure. But even when we do have positive ticks, all the market can do is trade sideways. So very, very bearish. And of course, this, hey, this market could rally out of nowhere. But this time actually feels like real selling. So what are stocks that I'm shorting? Priceline. Priceline, I like this one because it's already had a negative consequence and has been forming kind of a bear flag here. So even if the market does rally, I don't think the stock is going anywhere. Now, obviously, Priceline is a pretty pricey stock, so we've been doing put debit spreads to reduce our exposure. Buffalo Wild Wings. This is one we've also added. You can see that it's got a daily squeeze and a weekly squeeze, and it continues to push lower. And again, it's a stock that already looks like crap. Federal Express. And the stock isn't horrible, but its parent is horrible, the transportation sector. So these are the ugliest stocks. And you might be thinking, well, John, why aren't you, why not short something like a high flyer like Amazon? Well, yeah, it might come down too, but guess what? If the index is reverse, Amazon is going to be the first one to reverse as well. However, if the index is reverse, Priceline, the transports, they're already looking pretty bad. Okay, so that's what we're looking at there. In the premium video, I'll talk about the specific sell signal that we used in the indexes for today. And then from there, the question just becomes, where do we go from here? Well, if we look at the NASDAQ futures here, you can see on the daily, we are coming back to the mean, right? But look at the volume here. The volume here is tremendous. It's like some of the highest volume we've seen in a while. And when you've got volume that is that big, and I think this could turn into the highest volume day of the year, and that's significant. So the highest volume day of the year was back on March 21st, and we are already close to that. And by the way, I'm doing this, it's 1:40 p.m. Central. I'm in Las Vegas. We're at the Money Show. For those of you that were at the Money Show, great to meet you. And I'm about to head back to the airport. And by the way, every time I get on an airplane, the market's reversed, in case you guys didn't know that. So on a 20, that. But if we look at this from this low to high, a 50% retracement is still below this. And if you look at this volume here, we did have a couple of days here where even if this market does rally, it took a while to regain its footing. So I do think that we have the potential here to actually get to the weekly mean, which would take us down to 53.50. And then if we look at the S&Ps here, daily chart, look at the volume here is not as much as the NASDAQ, but it's, it is kind of getting trounced. I'll show you a couple of positions here. So Federal Express today getting trounced. The fun thing about down markets is they go down a lot faster than they go up. So that's always good. Buffalo Wild Wings as well. They go down faster than they go up. And then the transportation sector is the trickiest one because there's no real liquidity in the sector itself, like the ETFs don't have a ton of liquidity. So I shorted some stock and also bought some puts. All right, so that's what we're looking at there. In terms of key support levels, looking at the daily chart here, this is, when we see these moves here, you can see when you get a big candle like this, you get some volatility after that. And so the idea that we could get down to 23.47 is, I think that's pretty, that's very achievable. But the question is where could we get there from there? I always start to eye when we see some big selling like this, the trailing 21 period lows. And so that's down at 233 on the spiders. All right. So the importance with stuff like this is just to be able to go with the flow. Yes, this market has been a great, fantastic market to the upside, okay, and especially when we look at a weekly chart here on the Qs. But once you take out the low of the, like on this, we've been aggressively long in the last 4 weeks, but once you take out the low of the prior week on an uptrend, you've got to get out of your longs and then start looking at the short side, which is what we're doing today. So fun stuff. Tomorrow won't be dull. I'm headed to the airport. I will see you guys in the room tomorrow.